your house payment is 35% of your gross income, chances are you're living on debt, you're not saving enough to keep pace with the real cost of living, and you might have holes in your insurance portfolio. So it's important that your home ownership decisions are in keeping with an overall approach to financial balance. What compounds home ownership, however, is the type of mortgage and the method with which people use to pay off their house. Not only could the house be too big and the mortgage payment be too large, but there's this mad rush to pay the mortgage off as quickly as possible. Financial experts everywhere would have you accelerate the payoff of your home mortgage. Pay it off in a 15-year time frame as opposed to 30. Pay it off by making voluntary, optional additional payments to pay the mortgage down sooner than later. This is all curious to me when mortgage rates today are at an all-time low. You can finance a home for 3 or 4%, and yet those same financial experts would have you someday be able to save into a mutual fund that earns 10 to 12%. Isn't that backwards? If you thought you could really earn 10 to 12% on your money, the last thing you would want to do would be to quickly pay off a mortgage with an additional higher payment. You'd be better off having the lowest mortgage payment possible so that you could put the most amount possible into your favorite mutual fund. The accelerated payoff of your home mortgage objective also stands in the way of other financial priorities that you need to consider. While you're paying your house off rapid fire, what happens if you die? What would happen to your family? What happens to you and your family if you could never work again due to a permanent disability? What would happen while you're focusing on paying your home mortgage down if you were to be downsized and lose your job for a year? Having an ample amount of short-term liquidity and being properly protected are simply more important from a financial priority standpoint than the paying off of your house. Balance. The living balance sheet talks in terms of balance. It's important to someday have a house that's free and clear, but to approach that in a way in which if the world changes its mind, if the unforeseen happens, that you're also insulated from the hardships around that. Having the right size home is one thing. The manner in which you pay the mortgage on that home is just as important. The combination of those two financial issues can have tremendous impact on how things end up for your retirement. A living balance sheet professional can guide you to make the right decisions around home ownership. Work with them, see what financial balance looks like, and see how your home should fit in to your overall financial picture.